Hey everyone, it's Mike, and I'm happy to announce the release of the Power of Point of Control trading course. And what this course deals with, it deals with the order flow point of control, which is a very important piece of information in the trading puzzle. In order flow, there are three basic concepts of analysis. There's point of control, which is what this course is about. There's delta, and there's imbalances. And the reason why I created this course is because, not a lot of people understand and know how to apply point of control in their trading. And so what this course is going to teach you is what you need to know about point of control, what you are looking at, and more importantly, what you need to look for. Point of control analysis can be used with futures, stocks, and Forex, and even CFDs because it's a measure of value. Markets exist so traders can find value. Personally, I think it's the only piece of order flow that can be used with stocks, Forex, and CFDs. This is how it looks on a Forex chart. This is Euro USD. Each bar has a point of control. Here it is on Apple stock. Each bar has a point of control. Here it is on the CFD. This is the Australian stock index, the Aussie 200. And you can see each bar has a point of control. Now futures, of course, point of control in each bar. And what this course teaches you is how to analyze those point of controls so you can make a very good trading decision based on what's happening right now. Now, why do markets exist? Is because markets search for value. You got to remember, markets are dynamic. Traders' price expectations constantly change. That's why prices go up and down. And as a result, so does their thoughts on value. Markets move up and down in search of value. The important thing to keep in mind about value is that value can be different prices rather, to different traders. Trader A may think value is $16, while trader B may think value is $12. When you add more and more traders to the market, prices move up and down as the market keeps searching for value. The price level where most trading occurs is the level where the majority of traders agreed on price is considered the true value of a commodity. Now, point of control is the quickest way to determine where support and resistance is right now based on what's happening in the market. With point of control, you don't have to do much analysis trying to determine support and resistance levels. The market tells you the levels. It tells you the levels through point of control. Now, most traders are not aware of the power of understanding what's happening in the markets right now. Support and resistance together with the order flow is one of the best edges a trader could possibly ask for. This is an order flow chart. Okay, I'm not asking you to understand every little concept of order flow, but understand point of control. Point of control is the area in a bar with the most volume, and it's highlighted with a box around it. Now, have you ever wondered why markets sell off, rally back up to a certain level? Well, look, it rallies right back up to that previous point of control. This is an area that, unless you're using point of control analysis in your trading, you're not going to see this. You're not going to understand why prices rally back up there or sell off and retrace back to a certain level. Point of control is a tool, though. It's not a system. Oftentimes people buy an indicator or a tool and try to use it as a system. It's not a system in and of itself. Point of control is a tool for solving a specific trading problem. Think of it this way. You have a hammer, a screwdriver, and a saw. Can you use a saw to screw in a nail? No. Does that mean the saw is a useless tool? No, of course not. Can you screw in a nail with a hammer? No, but you get the idea. Point of control is a tool to solve a specific trading problem. One of the reasons traders fail is they tend to overcomplicate things. Rather than take the information the market presents to them at face value, they try to manipulate the data in ways that distort reality to suit their impression of the market. Traders often fall into thinking that the more complex something is, the better it must be. That's why the majority of traders fail. They overcomplicate themselves out of the market, basically. We've all seen people with charts with all these different indicators. How many indicators do you have on your charts? And then what happens when the indicators start working against each other? What do? You just get more confused than anything. It doesn't get any more simple than point of control. Every bar has one. You just need to know how to interpret them and use them for your trading. I mean, look how clean this chart is. You just have your candles and a little box around the point of control in the bar. That's it. You don't need all fancy indicators and lines lighting up your screen. Just keep it simple. Sometimes simple is the best for a lot of people. The most important part of trading is to learn how to place trades at the correct level. The second most important part of trading is learning to manage your trades correctly. Point of control helps you keep you on the right side of the market and acts as your first level of support and resistance. You can see when a market is ready to fall over by looking at the point of control. I'm not going to get into some of the specifics in here, but in the course I go through 10 different trade setups so that you can see at an instant once you start recognizing what's happening in point of control, you can see why this market sold off when it did. So to become an outstanding trader, you should learn how to add two winning trades when they are confirmed as good trades. Just because you're in a trade, that's one trade. But if the trade is going in your direction, sometimes it behooves you, it's in your best interest to add to that winning trade, get more out of that trend, right? And sometimes, you look at a chart afterwards and you think it's so obvious, but do you really know when to add to a position? Point of control, if you understand point of control and understand the confirmation that you're in a trade, that it's a good trade, go ahead. You can add another contract to that trade because you understand why the market is moving and that it's moving correctly in the direction that you want it to be. When you know how to read the market and it's clear to you what's going on, you have to make the most of it. What this course will do is help you identify the cues that the market is giving you so that you can recognize them as you're expanding your experience necessary to follow the constant stream of information made available to you in the order flow. The purpose of this course is to educate you on the power of order flow, point of control, and how to use it in your trading. Traders are constantly searching for an edge that will lead them to better trading. When you understand point of control, you gain an edge over other market participants who are blindly following price. Point of control helps you understand where value is right now. Once you understand where value is, you can make more informed trading decisions. One of the traps traders fall into early in their trading career is thinking that all traded prices are equal. Different market prices mean different things to different market participants. A long-term real money trader using daily charts may view a new high completely different and even opposite than a short-term intraday trader using 1-minute charts. That's why volume is important. It helps you to determine where the big players are active in the market. So understanding point of control allows you to trade on the side of the big players. It allows you to sell when they are selling and buy when they are buying. In other words, when they're distributing or accumulating. If you routinely try to trade against them, you will eventually get run over. Now, what separates institutional traders from retail traders is the sheer size of their trading. A $100 million notional value order is only about 750 contracts in the E-mini S&Ps, and it's not uncommon to see that size orders go through even on the reopen on Sunday night. Not even during the trading day, you're seeing much bigger orders going through the trading day, but even in the night session, point of control will help you find these areas where institutional players are being active. So there are many systems in use by traders which utilize volume and point of control, but for the most part, they remain unpublished. The methods described here are what I use and other order flow traders use. It's a shame that there's so much information about order flow out there, but it's just kept by individual traders. It hasn't hit the mainstream, and that's why I've created this course, is to bring this information out to the mainstream so that you can learn more and apply it to your own trading. And it can be seen from the examples that are in the course how point of control is used by traders, and that their proper analysis can be a useful tool for technical analysis of prices. As in any method for analyzing the market, there are limitations to their reliability due to inherent fundamental factors that are completely unpredictable. I'm not going to say every single point of control has useful information. They don't, but there are times where it's very obvious that you look at the chart, you kick yourself for not taking the trade because it was so obvious. You got to remember, right? Dynamic and unexpected occurrences may suddenly reverse trends without warning. Like I said, you don't know when, as soon as you get long your 5 E-mini S&Ps, a trader at Goldman Sachs has an order come across his desk to sell 5,000 S&Ps, and you're long 5, but boom, right at that instant, 5,000 come in, and you're run over. That happens. That's sort of the unpredictability of the markets, but in general, there is some rhythm, I believe, to the markets. Political and international tensions, especially nowadays, economic releases, speeches by Fed bankers, etc., can disrupt any trades taken. You have to keep that in mind. But point of control, in general, will keep you on the right side of the market and keep you in good trades and help you find good trades, and that's what you want to do as a trader. So if you're ready, let's go to orderflows.com/poc.html. Now remember, this course is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So go to orderflows.com/poc.html and let's get started. And I hope to see you on the inside. Bye-bye.